It's Thursday, that means it's time to talk about some legacy stuff. GME popping off today, yields popping off today, and disturbingly, the VIX is at 31 again. So let's talk about some of these correlations here. The VIX is the fear index, basically, the volatility index. When the VIX rises, there's lots of volatility. This week has been quite volatile for legacy. And historically, if VIX is up or rising, that is bearish for crypto. If it's falling or low, that has been bullish for crypto. So we've renewed fears in the market as VIX is rising here, not a bullish signal for BTC on the backdrop as we're falling below 49 from 51 earlier in the day. I think a lot of people are probably still have PTSD from March last year. So maybe that's playing a role here. It's been almost a year since the March craziness. No, I don't think we're going to see that level, that magnitude of sell-off that we did in March. But the market is definitely spooked. DXY continues to be heavily negatively correlated on a 30-week rolling basis. So those moves are important in that if Dixie falls, that is also bullish for BTC. Gold continues its historic, really, negative correlation. I mean, it doesn't get much more negative on the correlation. It's probably at 75.80 right now for gold. I'm still bearish gold. I'll show why in a few charts, but that chart doesn't look good. Perhaps the worst of all, correlation-wise, is SPX and NASDAQ, which continue to basically hold a 90 to 95% correlation, and those charts look atrociously ready for some pullback. So collectively here, I'm not bullish on DXY, and I'm not bullish on gold, but VIX, SPX, and NASDAQ both look like we're ready for some pain here on crypto. So it wouldn't surprise me, regardless of your sentiment bias right now, based on the crypto charts in a vacuum, that things are going to get weird over the next week/month of March, which, based on seasonality, is historically just a flat or negative month for BTC anyway, so it's almost a write-off. Q2 is where it's at. Q2, Q4, that's when the parties happen. Q2 historically has been an excellent quarter for pretty much everything in crypto. Let's take a look at DXY. DXY, like I mentioned, past couple weeks, had an opportunity at a bullish reversal with this head and shoulders type pattern that it ran through late last year as well. That's continued to sell off. So the playbook is repeating. Head and shoulders, attempt at a reversal, sell off, another attempt at reversal, and sell off heavily from there. So if we get a stimulus by April, I think, they announced, or they planned to pass the stimulus in the US by January, February, I'd imagine, when they were talking about it. That hasn't happened yet, so we're still waiting, or the people who need it are still waiting. So the question is that priced in? Or, what is the market reaction going to be when that inevitably passes? Is it going to be bullish or bearish if it's over or under 1,400? And if it's 500, 1,000 stimulus, how is that going to affect the DXY, BTC, that sort of thing? So this should continue to fall regardless. This is bearish overall, and that should be bullish for BTC. Now, if we break 88, 89, whatever the low is here, 88.95, I don't know, whatever it is, I'd expect to see an immediate reaction in BTC there. Gold, talked about this for several weeks now, but it's setting itself up for a pretty nice weekly edge-to-edge move, 7.5% drop from basically where it sits to 1650, something like that. This is a pretty clear setup, pretty nice setup in a vacuum. These happen frequently. I'll show one on GME that happened on the hourly. This stuff happens frequently enough to take this seriously, especially on a high time frame. So bearish gold, that continues. It looks like the run is over. The only thing that can save this is if this morphs into some sort of falling wedge or some sort of safe haven play. When everything sold off in March 2020, gold wasn't really a risk-off trade either, so, everything sort of correlates together. Here's the S&P, which looks pretty ugly here. The 200-day moving average is all the way down at 3,500. So it wouldn't be unreasonable. It hasn't touched or tapped the 200-day moving average since crossing it in May. So, it is what it is, right? Like, that's not unreasonable based on pure technicals for a move of that magnitude. And NDX looks like it's already headed that way. Just nasty sell-offs in the NDX over the past couple days. So that would be 11.7. And, NASDAQ has historically just been screaming over the past few months, especially. So can't rule that out, right? And if both of these are bearish, crypto is going to get interesting for sure. Here's GME. This is that edge-to-edge move that started on basically 1 hour into close yesterday, I think it was. After hours plus broke into 175. So it didn't quite hit the other edge, but at the very least, you can use setups like this as an entry signal. Where's the bottom? When is the bottom? What does that look like? Stuff like this helps significantly pick those out. So do I expect GME to break all-time highs or whatever this is, 500, 400? No, not really. It's all just some after-hours short squeeze by... It's basically hedge fund wars at this point. I mean, people thought initially it was the Robinhood stuff that really set it all off, but ultimately it was hedge funds against hedge funds trying to ruin each other. So we can blame the little guy all we want, but the big boys know how to play the real games, especially after hours and late into the close, really catching people off guard in that respect. AMC, kind of the same deal. You had your 1 hour edge-to-edge move. This one was closer to reaching its goal of 1150 or whatever it is. But at this point, once moves like this pull back, below the Kijun, which is the red line here, I would say, all right, it's done. I wouldn't risk tempt fate with further continuation beyond that. BBBY is another one that you could watch. At this point, it looks like a failed attempt at an edge-to-edge. So I would continue to watch it on the hourly and just wait for the hourly breakout. This is something I might actually play. I didn't play GME or AMC, but I may play BBBY on the hourly just because it looks like the setup is rather decent. And it's down, over 50% from highs. I mean, it's been pummeled. And if anything, BBBY has better fundamentals than these other two based on the cash in their balance sheet. Looking at MicroStrategy, which I should have been looking at all along just because they're so heavily in BTC now. The first troublesome sign is this volume that has sort of peaked and leveled off. It mirrors BTC ETH volume very closely. So that in and of itself is a bearish divergence. You're getting higher highs and less volume. Cloud is telling you to get out of this because TK lines crossed bearish. So if you're trading this on the 4 hour, I would be waiting. I'd be waiting for a bullish TK recross above the cloud, and that's got a month maybe. I don't know. This stuff is going to be slow. It's a legacy. They just bought another $1 billion worth of BTC that didn't really do much for price. It looks like that shock effect of pseudo BTC ETF, whatever you want to call it, debt vehicles has sort of waned. So I'd be watching this on the 4 hour. Tesla that announced their massive BTC purchase in their treasury. You couldn't see it on the chart. You'd have no idea where it was on which day because it didn't really affect anything. And just like MSTR on the 4 hour, Tesla on the daily is essentially telling you to get out here really for the first time since maybe late November. So it isn't like game over for Tesla based on the daily cloud, but you're getting this flat cloud at 590 or whatever that is. And for me, if I'm trading trends, this is definitely a warning signal that the trend is either flat, ranging, needs accumulation, needs consolidation, needs to make up its mind, and it's not really worth sitting in it at this point. Square on the weekly, another company with BTC on its balance sheet. TKC clamp is pretty clear here. It pretty ugly candle this week. Big sell-off, bearish engulfing on the 3 previous weeks. You had a spinning top on the prior week, which is an equilibrium in buyers and sellers, typically a early reversal sign. So this pulling back to 150, 160, 170, something like that, probably isn't out of the question based on the cloud metrics on the weekly here. GBTC, Grayscale, Bitcoin, Trust had a bearish div on volume and RSI, just like BTC Spot did. It follows BTC spot pretty closely. Overall, everything just like it's going to consolidate through March. It doesn't look mega bearish. It's not as bearish as MSTR on the 4-hour. It's not as bearish as Tesla on the daily based on trend metrics. But it definitely looks like it needs some time. When you get a higher high on less momentum, that's a sign that there just aren't as many buyers up there as eager to buy those highs as there were previously. ETH, the Grayscale Ethereum Trust, not a clear bearish divergence, but definitely pretty decent sized reversals. Whatever these candlestick patterns are called on Legacy, some sort of bearish engulfing gap thing, I don't know. But, that's not intra-week that wasn't bullish, certainly after that reversal. There's a nasty looking, nasty as in just ugly, inverted head and shoulders potentially, which could propel this to 34 to 40, which would be 3,400 to 4,000 on spot. And I should also mention that GBTC had a negative premium for the first time in a while / ever. So that's an interesting dynamic to consider as well. You can see here 45,000-ish for spot, and spot's at 48, 49 right now. So a decent buy, if I was trading this, would probably be the 200-day moving average at around 12 to 14. The CME futures BTC contract, again, bear divs on everything. Just looks like it needs time. This may set up as some sort of nasty head and shoulders, just like spot. It's way too early to call or look for that, but it's just in the back of my mind. When you get a shoulder head, you make another shoulder. We are far out from that, but it's something to consider. 200-day moving average is all the way down at 23, 24, something like that. And then looking at the CME futures dates, the rollover dates, there's typically increased volatility around these dates because there's a lot of open interest being bought and sold. Multi-million dollars worth of contracts expiring. So the August 31st, this green one, anybody who's in this contract is forced to close their position by the 26th, by tomorrow. So typically into the week of these rollovers, there's volatility. It's maybe not measurable. You can't necessarily look at that quantitatively in any way. But if we have highs or lows in price that are extremely out of the norm, volatility-wise, for me, in my head, I just write that off as, okay, this is a rollover week. Basically, I'm saying anything is possible, look what happened into this January, February rollover. We had that big, people thought it was the Elon candle. Other people thought it was open interest being sloshed around on Deribit and CME. So it's always worth looking at stuff like this because it isn't necessarily technical so much as it is just calendar dates and things getting bought and sold because they have to be based on open interest. So really still watching the VIX. VIX rising is concerning. SPX and NASDAQ looking toppy is concerning. BTC not having a lot of fun. This week, ETH especially just getting crippled from every angle. Fees as well as just correlations with BTC and Legacy. So the next week should be interesting. The next 4 weeks, next 5 weeks into March should be interesting. Should present some decent dip buying opportunities in crypto across the board.